on board Hemang Jani and find out where the opportunities are in this market. Hemang, hi, morning. What is it that you're making of the market? Seems like, it's all full up ahead of the election result. Doesn't seem like there's too much nervousness, given the way the indices are still pretty close to their all-time highs.
Asha, yes, I think the market is by and large trying to stabilize, and there's not too much of concern. But this being an important event, both from a stock market perspective as well as from the overall economy perspective, we are seeing a bit of a reflection of that coming in the IVs, which continue to trade at around 21, 22 zone. And by and large, I think people are kind of working with an assumption that you will see the stability and the current NDA will gain the required majority mark. So I don't think market is bracing for any kind of a negative surprise at this point of time. And we do think that given the earnings that we've seen so far, and the fact that we've underperformed US markets, there is a scope for some sort of an outperformance once the event is out of the way.
Okay, fair enough. Let's get stock specific then. And Hemang, wanted to get in your views on how you're looking at Sun Pharma. It seems like for the most part, brokerages are giving the stock a thumbs up post the earnings, saying that they're monitoring the R&D spends, although growth in FY25 could be a bit subdued. Your take?
So Sun Pharma numbers were slightly below expectations in terms of EBITDA, and we do think that though they have a guided for a very strong growth through their specialty portfolio, I think that is a little bit of time away. So short term there can be sideways movement in the stock, but from a let's say medium to long term perspective, this would be one of the core portfolio holdings that one can have when it comes to pharma space. We are looking at a 15 to 18% kind of a upside in Sun Pharma over the medium to long.
Okay, you've also got ITC that the street will closely be eyeing today with respect to their quarterly numbers. We're expecting margins to come in at about 36% versus 37.9%. The cigarette volume growth could potentially be flat, and the FMCG growth is likely to be in high single digits. How are you looking at the performance of ITC, and what are you penciling in when it comes to earnings, Hemang?
And I think numbers are going to be quite okayish. You will see a bit of a soft, performance, particularly when it comes to the margin, given the fact that the volume growth in cigarette is going to be quite muted. But we have to reckon that the FMCG as a sector is bouncing back. You're seeing action coming in Britannia, Dabur, HUL is trying to stabilize. So, given the fact that the sector is bouncing back, if you see even inline performance from ITC, the overall view there will be positive. I think the downside from current levels is very limited, and you can look for a 14 to 16% kind of an upside.
Hemang, let's also get a sense as to what your reading is when it comes to the entire infra pocket. Do you believe that owing to the elections, this is going to be a theme to watch out for? And where is it that you're finding comfort within real estate, infrastructure, even capital goods?
So I think these sectors have been the leadership sector when it comes to the entire bull market. Particularly if you look at the cap goods, real estate, and the defense, the railways. These have been taking the center stage when it comes to the entire bull market. So while the view there is positive, what we reckon is that because of the sharp run up that we've seen in many of these companies, it would not be prudent to make a fresh entry. When you look at, let's say, defense names at current valuations and prices, I don't think the risk reward is favorable. Same holds true for real estate also. So I think it will be better to move into the sectors like maybe pharma, FMCG, the banks which have been underperforming for an extended period of time. So the value is over there, and if one has to make fresh allocation, these are the better pockets. But yes, trading perspective, you may continue to see some momentum ahead of the event.
Very well for itself, I think, is the entire diagnostic space. This is a space which has seen A great re-rating, then a massive de-rating, and now mean reversion. Post-COVID, this entire diagnostic space just went through the roof. Compulsions of COVID testing, in a sense, really boosted the top line. Then came the sudden realization that COVID is over, top line fell, bottom line fell, competition intensified, M&A happened, and that was like a 2022 and 2023 story. But now I think sensibility is coming back, pricing power is coming back, infighting is reducing, diagnostic companies are not really fighting with each other both online and offline, and that explains that why suddenly diagnostic stocks are making a comeback. Now these are not very cheap stocks, but these are stocks which in a sense have potential to grow in double digit for the foreseeable future if you look at the top 3-4 listed companies. Hemang, what's your view on the diagnostic space?
Because I think when you look at the numbers and more so the commentary and the growth outlook by some of the companies, for example, Dr. Lal PathLab, the Metropolis, I think what is coming out very clearly is that there is a decent amount of growth that one is witnessing. There is not too much of a competition or pricing pressure that one was really anticipating maybe 6 months back. There is a little bit of stability. So, a sector where you see a decent growth of, let's say, 15-20% when it comes to your top line, a very high operating profit margin of about 20 to 25%. So that makes us more positive. The only point is that they are a bit expensive stocks and you might want to add, during the volatility, not commit everything at one go. But from a next 12 months perspective, one must have some exposure to the names like Dr. Lal PathLab and Metropolis.
Where have you added positions and where you think that there could be a little bit of more election re-rating left? If there is continuity, which is what it appears, where do you think markets are likely to, which are the stocks which could get re-rated further?
So, Nikunj, I think the pockets like cap goods, defense, railways, I think those have actually played out well. I don't think, by any valuation parameters you can justify, further re-rating, though the momentum can be there because of the event. So I think the value remains in pockets like banks, which have outperformed for an extended period of time. And now with the RBI announcing such a hefty dividend and the bond yields dipping below 7%, we do think that banks can see some re-rating or uptick because of that. So I would surely go with the SBI. I would surely go with something like ICICI Bank, which is delivering well. Kotak Bank, I think there was a sharp reaction when that RBI news came in. Now it's trying to bounce back. So I think it makes more sense to go with some of these pockets.
Meantime, I don't know if you checked out, Hemang, the numbers from Nykaa, Paytm yesterday. What were your thoughts?
Nykaa, I saw the numbers, but what surprises me is that such an overhyped company, when you look at the net profit for an extended period of time, barely is showing a 9 crore profit. Now, how does that justify the current market cap and the valuations? And it's not as if that Nykaa has, got listed very recently. It's been more than 15 months now. So I think while there is so much of hype and so much of excitement that people created a while back, when you look at the numbers, you feel that there is a lot of disappointment. So I would certainly not go with some of these names. Paytm is having its own sort of issues, so not too positive on these names at this point of time.
I'm going to let you go on that note. Appreciate you taking the time out and joining us. Let's move.
If you like this video, then like, share and subscribe to ET Now.